All right, joining me is Amy Oldenburg, head of digital asset strategy at Morgan Stanley, who, of course, is one of the world's leading financial services firms. They're involved in everything from investment banking to wealth management, securities trading, investment management. They do it all. And that also involves several initiatives around Bitcoin and other digital assets. I would say increasing initiatives, which is where we'll obviously be focusing our conversation. Amy is now joining me from New York. Amy, it is a pleasure to connect. Welcome to the podcast.
Great to see you, Nate. Thanks for inviting me today.
All right, so I have to tell you, I was looking at your background and I saw that you've now been at Morgan Stanley for some 26 years. And interestingly, during a large portion of that time, you were heavily focused on emerging markets, right? You were actually head of emerging markets equity for Morgan Stanley Investment Management. And so I thought to start, I'm very curious to hear how you ended up down the path towards digital assets, which I know this didn't happen overnight, but how did this all come to fruition?
Prior to my time at Morgan Stanley, I had started off as an accounting major. So I knew I wanted to be in business, but when I went to study abroad, they sent me to San Francisco in 1999. So I very quickly dropped my major and committed my life to tech in the early tech bubble that we experienced during 99 and 2000, and was building the first web presence for Fortune 500 companies back then. So I really kicked off, even from a young age, really focused on tech pretty deeply, and even the community around me. And I actually got to emerging markets because of what happened in 2000 and 2001, and we lived through the tech bust, and then the years after 9/11 and the recovery of the tech cycle that took many years to climb out of. But getting into digital assets also came through emerging markets. In the early 2000s, I had sat on our trading desk. I was doing our program trading and emerging market FX trading for our investment team. And as you can imagine, a lot of those counterparts that I traded with back then across the world, Russia, Turkey, South Africa, and others, were some of the earliest users and participants as we saw the digital asset space transform post-global financial crisis. So this was a journey that I had seen continue to evolve over time. And I think also, just as our investment team looked at financial services products as they rolled out in the emerging market world, where you had mobile first technology, some of those earliest fintech, digital money, mobile money payment systems, those really emerged uh, out of our countries that we spent most of our time in. So my background, 26 years while I live in the United States, most of my time was spent outside of the United States and focused on markets that had more challenging financial ecosystem, more challenging governments than what we deal with here in the US on a daily basis.
All right, so very good background, and I think a good segue here. So there's a lot I want to discuss regarding Morgan Stanley's initiatives around digital assets. And maybe before we do that, do you want to offer some context on how Morgan Stanley is thinking about crypto overall? Like, what's the broader mindset here that sort of guides the overall
Sure.
crypto strategy? Maybe you can talk about how that's evolved over the past several years as well.
Oh, absolutely. And this, we've been in looking at the digital asset space, looking at the underlying technology, blockchain technology, DLT technology, and the impact that has on our business overall for many years. So by no means is this a new initiative for us. We've worked through it for over a decade to get to where we are today. One of the areas, I think there's two areas of focus. So one, as you see the regulatory environment open up, the ability for us to serve clients and support crypto assets has significantly changed. And it will, the expectation is that that will continue to change going forward. But the second piece of this is just a very natural modernization of market infrastructure, of financial infrastructure, a journey that we've been on for many years. So if I think back to when I started in this business and we were still reconciling trades by hand, not even on the computer, or I was trying to track down Las Venezuela oil warrants and flipping through pages of documents that we had, to moving to algorithmic trading, electronic trading on our trading desk, and continuing through to even a more recent event, moving from T+2 trading to a settlement cycle of T+1 trading. That's all an evolution that we've been on in terms of the underlying modernization of infrastructure for quite a while, and a continued journey down that path, potentially to move to a T0 settlement cycle, to move to additional technology to support higher velocity of trading, 24/7 trading. That is an entirely adjacent but also different journey as we think about this broad digital asset ecosystem and the work that's happening around it.
How much has the shifting regulatory backdrop played a role in how Morgan Stanley views crypto? Has that changed a lot recently? Clearly, the regulatory backdrop has shifted, but has that then impacted the firm's thinking here?
Oh, absolutely. I mean, that was one of the things where we were we were restricted in many ways from even participating in some of the areas of adoption that were going on outside of bank holding companies. So you had independent asset managers, even, and we're going to talk a little bit today about ETFs, but they were able to touch crypto, to wrap those in ETP wrappers, with a bit more ease than we were in the past, and also just thinking about just the overall nature of uh, feeling that you have regulatory support to move forward versus fighting the regulatory battle uphill. So I think we're on a different journey now post post 2025 and with the current administration that we have here in the US, and it's pretty dramatically changed things, and I think even a surprise for many people in the industry how fast it's happening. As you know as well as I do, regulation change in financial services is not quick to happen. Usually takes very long time to go through the process and to continue through those changes and receive feedback. Unless there's a crisis. If there's a crisis, sometimes things can change very quickly. But in this environment we're in, where we're in reasonably strong markets across the world, uh, things are going pretty well, and we are still pushing the innovation forward here, which is very exciting. So there's a lot of work to do on the back of that.
You mentioned the crypto ETFs. Let's just go there now. And by the way, I should note, I know that technically these spot products are ETPs. I just refer to them as ETFs just for ease for everybody. But back in January, Morgan Stanley Investment Management did file for 3 crypto ETFs: Bitcoin, Solana, and Ethereum. And, Amy, I think that surprised some people in the industry. I'm not sure people were expecting Morgan Stanley to enter this space. But then in early April, the Morgan Stanley Bitcoin ETF rolled out, ticker MSBT. And that's already nearing $300 million in assets. It's actually been one of the more successful ETF launches this year out of over 460 new ETFs that have come to market. And we can certainly talk about that specifically. But I would love to hear more about the decision to get involved with digital asset ETFs to begin with. Like, besides the regulatory environment, what prompted this move?
There was a continued interest from clients, and I think that's one thing to note just in terms of how we think about our business overall for any of our divisions. We really are client-led culture here. So we're not launching something that our clients aren't asking for. We tend to follow and listen to where our clients' needs are. So I think it was a very natural place for us to start, especially if we're on a long-term journey around digital assets, to start with some of the, some people would refer to as one of the most OG assets there are in the crypto space, and to start with the Bitcoin ETP. So I think that really was the initiation. There's a long journey here of digital assets. If you're thinking about crypto as part of an asset allocation journey going forward that will continue to evolve, the ETP and a single asset Bitcoin ETP is the cornerstone of that path or that journey going forward. And that was the first product to launch. It also aligns, if you just look across our business, and we have our three divisions. We have asset management, our large wealth management business, and our institutional securities business. The other initiative that we had made actually at the end of 2024 was to offer solicited Bitcoin ETFs on that platform. So we started in both divisions with Bitcoin as we saw interest in clients wanting to take an allocation to this as part of a broader asset allocation initiative. I think there was a second piece for the asset management business that drove the Bitcoin issuance, and that is on the back of being able to in-kind spot crypto into ETPs now. So the SEC had approved that in the fall of 2025, and that allows us to also bring additional assets in and help support with the ecosystem of the traditional financial markets, a different infrastructure and experience for those clients that are looking to transition spot crypto into an ETP wrapper where we can offer additional services around that. So I think there's a couple of different drivers of that, but it was a great place to start with Bitcoin.
I mentioned the initial success of MSBT. I'm just curious, what's been your reaction to the first, month and a half or so of trading?
You want it to go well, right? We spend a ton of time on this. We spent years preparing for this moment when we get to participate in the market, and you don't know. I would say my direct feedback. I have many friends in the crypto native or the digital native space, also many friends in the traditional finance space, and we heard both sides of that debate, which is we need Morgan Stanley to launch a product. We need a firm like Morgan Stanley to get involved as a GSIB that issues products and come to market. And then the other side of that coin was there's already so many Bitcoin ETPs out there. Why do we need another ETP for the market? So we tried as much as we could also to take all the different considerations that go into any of our asset management products, if that's cost, quality of infrastructure, accessibility, and really make sure that we were considering that in that ETF. So we did come out with a 14 basis points management fee on that. Really trying to use our scale and our position in the market to offer some of the most attractive management fees on it's a passive single asset product. I mean, if we think about this across the digital asset landscape, across the traditional finance landscape, usually those products are pretty low cost, right? Usually cost goes with the additional, if it's active management, if it's more sophisticated product. So we felt that that price needed to be appropriately set on that product. And I think if you think about what we're doing across some of our other announcement that we've made more recently, even on spot crypto trading, we've come out with 50 basis points on crypto trading. Again, I think more of a traditional management fee that you or transaction fee that you would see aligned with some of our traditional business. So again, I think trying to bring what we can to the market to offer some more attractive dynamics around some of these products. And then maybe just a second point to make on this, we did partner even with another GSIB bank for underlying support of this ETF. So we partner both with Coinbase and Bank of New York for underlying custody. So first of its kind, also bank issued or GSIB issued and also GSIB custodied in terms of that ETP infrastructure. So really bringing that infrastructure to market.
I definitely want to ask you about the direct spot crypto trading, but as it pertains to the ETF, have you been able to discern any noticeable trends in terms of who is using this ETF and how it's being used? And I know it's very early, so maybe there's not a whole lot of data points there. You mentioned earlier that perhaps some larger investors can obviously take their spot crypto and exchange it for ETF shares. I think those are going to be some edge cases, obviously higher net worth investors. But anything noteworthy standing out to you thus far, just in terms of who's using the ETF and how they're using it?
Yeah, the earliest weeks of the ETF flows were all self-directed. And I think that's important to understand because I saw a number of articles out there making statements that our financial advisors were the ones that were using our own. We launched this specifically for our Morgan Stanley financial advisors to use, which they are absolutely able to use along with any other Bitcoin ETF in the market. They have an open platform. There's a number of solicited uh, Bitcoin ETFs that are available for solicitation on that platform, and they make that final fiduciary decision for their client as to what's best. But most of that early flow was self-directed, meaning that individuals were coming through bank platforms, the E-Trade platform, and other venues, and actively buying that asset directly. And that's, I think, a very interesting thing to see, that you still have the majority, and it's not unique to MSBT. We see that across our wealth platform overall. A fair bit of the activity is still self-directed, so individuals really making that decision. And what that really tells us is there's much more education and much more uh, conversations that we can have with financial advisors and with clients to really think about how this fits into an asset allocation going forward. As you had mentioned, high net worth and the in-kind transactions, we've had pretty significant interest in the in-kind. That's been a surprise to me. One of the things that I would say that indicates is, while the digital asset landscape has a lot of benefits, there's also some limitations to what you can do there, even from an estate planning, from other capital market services that you can offer around those assets, which are still limited. And by bringing some of those assets into the traditional finance landscape, we can offer more services around that. So if we look at our ETFs that are on the wealth now, this rate on Bitcoin ETFs are now 50%, so you can actually lend on the back of that. So that's just one example of services that can be offered if you're moving into that ETF with your exposure.
In addition to the spot Bitcoin ETF, I mentioned that Morgan Stanley does have filings with the SEC for both spot Ether and spot Solana ETFs. And I'm not sure how much you can talk about either of those. Those are live filings. So perhaps I'll just ask you to simply comment on how the firm is thinking about future product development around crypto.
Sure, that's a great way to kind of continue down that path of product development. We will continue to look at some of the largest market cap assets and make sure that our clients have the ability to take exposure to those. It's very much aligned if you look at what we're offering on the spot trading side through E-Trade and through wealth management, very much in alignment there in terms of the products. Some clients are looking for different ways to access those. It's no different than what we offer in many other assets today. We have mutual fund structure, we have ETF structure, we offer derivatives. You can buy local direct access to equities and so forth. So we offer a number of different vehicles, and ultimately it's up to the client's needs, the financial advisor's needs, and their ultimate goals in terms of how they construct that. So we're putting tools out in the market that they can use in many different ways.
All right. So one of those tools, which you've alluded to a couple of times, is direct spot crypto trading. So Morgan Stanley is rolling this out, as you noted, through the E-Trade platform. And my understanding, Amy, is that initially this is a pilot program. Correct me if I'm wrong. I assume it'll roll out on a more wide scale. But to your point earlier, like with a Bitcoin ETF, the pricing here is highly competitive, 50 basis points per transaction. That actually undercuts a lot of the bigger players in the space. So what more can you tell us about that initiative?
So you're right. There is a pilot, but every pilot typically moves into full access at a certain point. There's a way we can step into this, make sure we're managing our risk, assessing that security, making sure all of the pipes and plumbing work well, so we can give our clients a excellent experience in terms of participating in spot crypto trading on our platform. So that's important, and it'll roll out in stages, and there's definitely a path beyond that. We should see continued evolution of support of additional assets in spot crypto trading. I mean, we can't just exist with 3. There's many more out there and many more to come, and we will support those. But also, once we have that infrastructure in place and we start seeing the tokenization of real world assets, again, not just to keep this so super focused on crypto, because that's one way to gain exposure to some of those digital native assets, but there will be future products in the market. We know that just by the news that we have out already with the DTCC, Euroclear, NYSE, NASDAQ. There's exchanges, clearinghouses, so many different parts of the financial ecosystem working on this tokenization effort. And when that happens, the underlying clients of both wealth management and asset management and our institutional clients, we will support in terms of that tokenized effort. And that underlying technology is very similar. Some is different depending on the layer 1 that you're transacting on, but the underlying technology is similar. So we have wallet infrastructure, so you can hold tokenized assets and crypto within your wealth platform, and there will be additional services that are built out on the back of that. I don't even really have to walk through it. It's natural to imagine what that would be, if it's lending on the back of those assets, if there's new product development on the back of those assets. All of that is on a future roadmap going forward that we'll consider.
All right, so 2 critical things there that I want to briefly unpack. First, infrastructure. I have to imagine, Amy, that a huge part of your focus is on the infrastructure build, because you do have to think about things like custody and wallet technology and trading. Can you talk just a little bit more about that? Because I think everybody sees the end product, but it's the infrastructure that actually powers everything behind the scenes.
Oh, you make the best point, which is the client just wants a great experience. The client wants an easy experience and a positive experience, and our job is to abstract all of the technology away and make sure that that's what's running in the back end. I think that's, and maybe just to use the example of, it was just about this time when we moved from, it was right around Memorial Day, when we moved from T+2 to T+1. And when we moved, that is the infrastructure that was required to do that, and the preparation that was required to do that was immense across the industry. But nobody really heard about it because it worked. And it just transitioned from T2 to T1. And for the most part, everyone's trade settled, and you woke up the next week and just started trading T1. And that really is how the infrastructure has to be considered, even if we think about client infrastructure. It's extremely it is complex. It's different than some of the architecture that we have set up now. There's new risks associated with it. There's new security considerations. There's new vendors that we consider. But all of that is in the background, and that's our job and our requirement and the service that we bring to the market to make sure that we're providing the best in-class service, trustworthy, no-fail infrastructure, and market-leading opportunities for our clients. So that we're all bringing together, and we spend a fair bit of work. We have an incredible team across so many different parts of the market, and the Morgan Stanley ecosystem that really help us to deliver that.
The other topic that you mentioned earlier was tokenization. So why don't we close our conversation there? It's funny, I'll tell you, earlier this week, I made a comment that I feel like securities tokenization is moving much faster than some people realize. We now see the SEC with some pretty significant initiatives here. But to what you were saying earlier, we are now seeing regulators. We're seeing major exchanges. We're seeing other intermediaries like the DTCC. They all are heavily involved here. And so I'd love to have you just talk a little bit more about how Morgan Stanley is thinking about securities tokenization moving forward. You gave a little bit of color earlier, but just talk more about that.
Sometimes I'll get the question, what asset class is priority, or what are you focused on? And for us, I think if you look across the board, every different business is actively looking at the digital asset opportunity to understand where the connectivity points are going forward. So if that's with our equity capital markets team, our debt capital markets team, our prime brokerage business, our structured notes business, privates is definitely a big conversation. Tokenization of funds, tokenization of money market funds. You can walk and take a journey across our entire business, and almost every stop in every business that we run across the organization has some impact to the future of tokenization. I'll give you another example. If you think about our FX desk, and I talked to them a fair bit on some of the activity happening, with so much happening around stablecoins and the changes in cross-border payments, and thinking about the future of underlying rails for money movement across the world. The FX desk is in the center of a lot of that activity. So they have to think very carefully about this. Is pairs trading now Mexican peso to USDC? That's very much a possibility and a need of some clients. And those are some of the considerations that we need to think about how we support that going forward. So it's not just this, it's not a small consideration. This goes to my point about it's totally new underlying tech, and it will over time transform the business, but we should stay in reality. As much as I can make some incredible predictions about what's going to happen over the next 10 years, there is going to be a period similar to many of the other eras that we've lived through where there will be a hybrid world that evolves over time.
Well, there is so much going on here. You sit in such an interesting perch. Morgan Stanley, smack dab in the middle of crypto. I think you're in a really fun place, certainly a challenging place, but Amy, we'll have to leave it there. Greatly enjoyed the conversation. Thank you so much for joining me.
Great to see you. Thanks so much.
That was Amy Oldenburg, head of digital asset strategy at Morgan Stanley. Thank you for listening to or watching Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.